Namaskar, my name is Shishir. G20 declaration has endorsed recommendations given by Financial Stability Board on crypto regulation. At the same time, it has welcomed the synthesis paper prepared by International Monetary Fund and Financial Stability Board. Now the expectation is that the FMCBG, Finance Minister Central Bank Governors meeting to be held at Maracas next month, will discuss all these recommendations in detail, and then each of the country will start working on that. So what next for Indian crypto sector? To talk about more, we have with us Mr. Rajagopal Menon, Vice President of WazirX, and Mr. Kiran Mysore Vivekanand, Chief Public Policy Officer, Coin DCX. Welcome, gentlemen, to the show. When we are talking about regulation, and at this moment, it is very clear that there will not be any kind of ban. What kind of regulatory structure you are expecting?
I'd like to start off by saying that we have already started taking baby steps towards regulation. So in the 2022 budget, the finance minister introduced the 1% TDS, the 30% tax on profits. In 2023, crypto was brought under PMLA. So what you're seeing is a regulation by stealth, or baby steps towards regulation. So you're absolutely right. The synthesis paper and the recent developments at G20 have shown is that the ban is out of the question. What we'll have to wait and see is that what route India takes, because India is very, very clear. In fact, Ajay Sethi, the finance secretary, actually on the bylines of the G20 summit said that we will study the paper and then we will draft regulations that are suitable for Indian conditions. So my guess is that you will have incremental steps towards regulation. You are absolutely right. We've come a long way. When it comes to bans and so on and so forth, they are no longer in the question. Now we are talking about taxes, how much TDS, how are you going to treat these assets? So the discussion has evolved far away from from the bad old days of 2017 to 2020.
Okay, Kiran, what's your take on the regulation side?
So a couple of things, right? Like one is the synthesis paper covers the risks involved with the crypto, specifically to do with financial stability and macroeconomic and financial stability risk. And what they have also said is that they have made 9 high-level recommendation. The synthesis paper covers those recommendations. If I put all this recommendation together, as Raj already mentioned, there are few regulations which is in place for exchanges in India already. But I would say that all put together, there are 5 principles on which India will be working along with global G20 countries and come up with some kind of consensus. The first one is standard taxonomy. Definition of crypto needs to be clear everywhere, because we believe that crypto is an asset class. Someone believes it's a security, someone believes it's a fiat currency.
Yeah.
So there is a lot of confusion around a particular token. So even in the token, each and every token has its own characteristics. When you talk about a stable coin, it has its own characteristics. When you talk about utility token, there is a character which is comes along with that as a technology. So it is very important to define clearly all the ingredients of VASP or this entire ecosystem. That's very important. The second one, the standard travel rule is already out, and India is a member of it, and so is G20 members. I think a robust travel rule where access to information and exchange of information is passed very easily will help in combating terror financing and money laundering. This thing. This is the second principle. The third one is investor protection. The investor protection, as you rightly mentioned, now you asked about awareness, right? Like it is very important to create awareness among what is the crypto and what is the intrinsic value crypto brings in. Okay, it's very important. Along with that, there needs to be transparency. For instance, a coin which has, or a token which has been listed in X exchange and not listed in Y exchange, why it is so? There should be clarity, there should be standard. Along with that, there should also be a redressal mechanism where the consumer protection is taken care of. This is the third principle. The fourth principle is some standards, some operation standards is extremely important. And fifth one, according to me, is uniform taxation. As you already know that India went ahead, though the purpose of taxation was not regulating this industry, but to curtail this industry. What we have seen, the data shows that India in last 1 year, Indians adopting crypto as a asset class has grown by 12%. However, Indian exchanges have seen a reduction of volume by over 90%. So where is this volume going? The answer is it is going outside India to a foreign exchange which do not have registered office in India, because they provide an option, to do a peer transaction. But it is not the mistake of the exchange which provides this, because this is how generally cryptos are exchanged. The problem is that the government needs to understand that traditional method of controlling will not happen for a technology, emerging technology, and needs to work with the industry and find solutions for this.
Okay. Raj, I'm just taking one point from Kiran when he was talking about the fiat currency versus the asset. Many of the people, when they say crypto, the first term which comes in their mind is a cryptocurrency. They always try to use the word currency, and that is giving some kind of you can say misinformation that you are dealing with a currency, but you cannot have dual currency in your country. That's a reality. So if I ask you a very basic question, that if you have to explain to an individual that this is a crypto asset and it is not a cryptocurrency, how you will do that?
Very simple, Shishir. If you look abroad, let's not look at the use cases abroad. What crypto, the terms can be used interchangeably. In all honesty, cryptocurrency and crypto assets, they are the same. Literally, a Bitcoin is a crypto asset if you store it as an investment. If you choose to buy something with it, it's a cryptocurrency. It's as simple as that. What the industry in India is saying is that we do not want to replace the INR. We do not want to, become legal tender. All we're asking for, as Kiran said, is treat us like a asset.
Asset.
So it's as simple as that. We are not saying you will buy. At the end of the day, our hope one day is that you should be able to buy Bitcoin as easy as you buy a mutual fund or a stock or something like that, and profit enormously from it. Why do you want to keep millions of Indians away from one of the best performing assets in the world? Okay. Already we know that our digital platforms, our payment platforms are the best in India. The Aadhaar and the UPI stack is second to none. So why are we a little apprehensive about whether how Bitcoin can actually supplant the rupee? The industry is very, very clear. Treat us like an asset. That's all that we want. So it's as simple as that. In India, we are only asking for any cryptocurrency to be treated like an asset. You will not be able to use it for buying anything or purchasing anything at this point of time.
Okay. Kiran, the other thing that when the taxation was announced, at the same time, we had also seen announcement about the CBDC, that's a central bank digital currency. And it is also considered as one of the challenge to the crypto asset. How do you see that this kind of information that CBDC is an alternative to crypto? Is it correct to say? I don't think so, but what your view?
So exactly, this is exactly what Raj was saying, right? CBDC is a fiat currency. It's a digital version of INR, okay, which RBI recently has announced or issued. And crypto assets are asset class. Okay, it has an intrinsic value. The only worry or only confusion which is created is the crypto, when crypto currency or a Bitcoin was brought in, introduced, the purpose of Bitcoin was to replace fiat currency. Okay. That has created all these problems. Even today, Bitcoin in many countries are considered to be a parallel to a fiat currency. But what again we say is, let's look at stocks and rupee. Okay. Similarly, CBDC and stocks, CBDC and crypto are like stocks and INR. And let's not, have, yes, the technology is same. Okay. Both come with the blockchain technology. Blockchain technology, there are two things which is very important in blockchain technology. One is transparency. One is, the freedom, or what you call, is that more number of people should be allowed to use that technology. And finally, there should be an intrinsic value or a sort of incentive, which is what crypto token is all about. That has nothing to do with CBDC's characteristics. Yes, a stock, if there is a market where I can use stock as a rupee, in a market where I can buy and sell, yes, you can. Yes, there are characters which are like an INR, but CBDC, comparing CBDC with crypto tokens like an Ethereum is two different things altogether, and the technology and the utility are two different things altogether.
Okay, Raj, coming to the another aspect, which is the investment thing. Since we all are talking about the crypto as an asset, as an investment class product. Now, considering the financial literacy in India, which is just around 27%, 28% in this country, how people will understand this kind of technological product, which sees a lot of innovation on a regular basis?
Shishir, frankly, I think in India, people are not looking to understand the technology. I'm being very honest with you. What they're looking at is that Bitcoin was $0 in 2008. Today, it's available at $25,000. It touched $67,000. In the history of the world, no asset has given such rate of return. They are looking at Ethereum, which did an ICO in 2016-17, and now is at about $1,300. So they are seeing that, and they know that ye kuch technology hai. There is something about this technology which is which can cause these tokens to appreciate phenomenally. Now, they might not understand the use cases. They might not understand DeFi, they might not understand lending, they might not understand staking. But what they see is that the rate of return, they only understand the rate of return. Like, when you buy a car, you ask, mileage kitni milegi, how much mileage? Literally, they ask, okay, fine, how has this asset done, even, in the past? And then they say, okay, fine, if it has done so well in the past, even if you halve it, is it a good option for us to look at? That is how these decisions are arrived at. Having said that, let me be very upfront and tell your viewers that crypto investments are not for everybody. These, in stocks, for example, if your stock falls by 15 or 12%, there are circuit breakers. There are no circuit breakers in crypto. 30% up and down in the same day is a given. These markets are open 24/7, 365 days. There are no Saturday, Sunday offs. So, things could happen while you were sleeping on a Saturday night after a heavy night partying, and you won't know what has happened. Your positions could all be wiped out. So if you are looking at investing in these assets, it has to fit your risk profile. We always advise users that only invest or look at, investing in money that you're willing to lose. So typically what we say is that between 1 to 5% of your total investment corpus. So even if the markets do very well, it will give, the crypto markets do very well, it will give you a very good jump in a portfolio. And even if it crashes, like the crash that happened when, Bitcoin went from 67,000 to 30,000, you're not affected too badly because it's only 1% of your portfolio. So be very, very practical about it, because if volatility is not, if you're not comfortable with volatility, then crypto would be something that you should best avoid.
Okay, Raj, I really appreciate that when you said that you put your 1 to 5% of your total resources into the crypto and be ready to lose. That is the most important message to the crypto investor. Kiran, I'm coming to you that when we talk about investment, most of the investment product have some kind of underlying asset. When we talk about crypto, what is underlying asset?
Okay, this is a big story, but I'll try to make it as simple as possible. I'll give you an example. A car and fuel. Okay, car is blockchain technology and fuel is crypto tokens. Now, without crypto tokens, the car is useless. Whether you buy a a crore by paying 1 crore this thing, or not, that the entire car is useless because without the fuel. So how this crypto token work is this. Now, for instance, it's very simple. Now you have a bank account. I will try to make it simple as possible. You have a bank account and you withdraw 20,000 rupees today. The account is debited and there is some transaction which happens in the bank. Okay. This transaction change in the ledger, what happens? It's a service given by the bank where they are debiting the 20,000 from your account. The same thing happens in blockchain technology, where there is a transaction which has been done within the blockchain. That transaction, what you do, okay, is done through generally right now in traditional this thing, it's a nominated person who does the transaction. But in blockchain technology, it's for everyone to come and it's a open source. Okay. Now there somebody does that transaction. To do that transaction, they have to go through a process where they have to solve a couple of problems to get the right to make that transaction. So to make that transaction, the person who does that transaction needs to be incentivized. So that incentive, the underlying incentive is the token, is the crypto token. I don't know whether I confused you more than explaining, but a simple.
So what this is what Kiran is talking is like an industry expert, but let me give it a shot, Kiran.
Yeah, please
So,
go with that. Yeah.
so all of us, so Shishir, the idea of money is very simple. All of us agree on the value of money. What is money? Money is something that we all agree universally. The society agrees that it has got value. One fine day, Modi ji can wake up and say that your notes in the pocket have no value. So what so does it mean that the INR doesn't have any value? That's the question. The other question that I would like to ask you is that if you look at an M.F. Hussain painting, okay, you might say, what rubbish is this? You know, my 5-year-old daughter can draw better than this. But people are willing to pay crores for it.
Yes.
Okay. So the idea is that value lies in the eyes of the beholder. Okay. You might think that, that M.F. Hussain painting is worth 5 rupees and your daughter can paint better. But there are people who are willing to pay 5 crores for it. Now, all of us agree that what happens in a Bitcoin network, okay, Bitcoin is, I'm giving you the simplest possible explanation for it, is that the network, okay, transfers billions of dollars of value, okay, billions worth of value instantly. So how can you quantify that value of that network? Okay, a network that can transfer. So if you try and transfer money through a Visa network or any other MasterCard network, it is going to take you 8 to 10 days. It's going to take you 10% cost, or a 10% of your transaction cost. Here, in fractions of a cent, I can send Kiran, who's sitting in the US, $1 billion in as easy as sending as an email. This network has never been hacked. Okay. In the protocol was released in 2008, 2009, 2010. Okay, it's now 13, 14 years. It has never been hacked. So what is the value of a network that has never been hacked? So these are the intangibles that people have to factor in. Plus, there are millions of people who actually find value in a token like Bitcoin. So society agrees, millions of people agree that this token is value, and that is how value is created. And that is how, the demand and supply of Bitcoin, actually what Kiran was explaining was the supply part of Bitcoin, but the demand part is, people actually mine the Bitcoin and people like us actually buy it. So that is what leads to the instability in the price of Bitcoin. But the long short is that value lies in the eyes of the beholder. You and I can agree that, okay, fine, Bitcoin has got value because millions of people are actually paying good money to transact in Bitcoin.
Okay.
I hope it made some sense.
Yeah. It's now much more clearer. Now my final set of questions to both of you. Now, what next? I mean, we are seeing some kind of timeline. If I go by the synthesis paper, the timeline is by the end of 2025, we will have some clarity on this thing. So we are expecting that within next 2 to 3 years, the regulation will be there. So what kind of growth you are looking for the crypto industry in India post-regulation? And do you also see any kind of tax rationalization, because that is also very critical to bring investors into this asset category? Kiran?
Yeah. So I think we are excited about India as a market for crypto. As I already mentioned, uh, though Indian government is just now through G20 has agreed to regulate, but adoption of crypto in India has happened long back. Crypto is here to stay. Data show that there is a 12% increase in adoption of crypto in last 1 year. Data also shows that almost 18% of active users on 5 top foreign exchanges are Indians.
Mhm.
Clearly to show that there is an adoption and there is an understanding on this asset class. And we are super bullish about this industry and about the market. And yes, for a level playing field, now the problem is the government should also understand that what we are talking about is an asset which is borderless. So if you believe that by taxing you are controlling it, it is not happening, because the moment you tax, there are other avenues through which people are evading taxes, which is creating a sort of not level playing field for Indian exchanges, because majority 80% of today, 80% of the volumes are going to foreign exchanges who do not have a registered office in India, basically just because of two reasons. One, they have a product which is called P2P, which allows banking rails, which we do not have. And second, they don't have to deduct TDS because they don't facilitate any transaction within the system. Okay. Now with this, 80% of the volumes are going outside India. And what as an industry we are requesting is to reduce that 1%. We appreciate why 1% TDS was brought in. We believe that it is for discouraging Indians from investing in crypto, and second, to track it. Now discouraging is not happening because data is already showing it, but at least for you to track it, reduce it from 1% to 0.01%. This is what we asked last year also. And the same is, industry's request this year also. And we are hoping that with the data, India will look into this and some rationalization around taxation will happen. The second bit is on the set of losses, where now even online gaming has set off of losses. And why an asset class like this, where the skill level required to invest in crypto is far, far superior than playing an online game, should not be considered for offset of losses, is a big question. This is another thing which we will be looking at. Of course, 30% can be reduced, and if there is global consensus around taxation, it will be good for the industry and for India as a whole.
Okay. Raj, your final note from you. I mean, at the end of 5 years from now, when the regulation will be in place, when we will see some more clarity on the taxation, what kind of industry we will have by the end of 5 years from now?
Oh, Shishir, I'm very, very hopeful. So if you look at India's population, we are at about 142 crore. Okay. I think there are, the last data that I have is there are 12 crore demat accounts.
Yes.
Okay. The crypto industry says the guesstimates are, because there are no sure numbers around this, because there are many players, there are about 35 to 50 million crypto users in India. So if you look at the scale and the scope, we are just scratching the surface. Also, we have to understand that India is a very young country. We keep talking about the demographic dividend, and we keep skipping, revolutions. So you didn't have the landline, you went straight to the mobile. You didn't have the landline phone, you went straight to the mobile. So we skip technologies. Similarly, the young guy is not going to today, who is working in a call center somewhere, or is trading somewhere, is not going to go and invest in PPFs and FDs and so on mutual funds and all that. He is going to invest in something that is more hip happening and which he can relate to. He understands Elon Musk. So, Elon Musk tweets regularly about crypto. So, his preponderance to invest would be towards crypto. So I think the sky is the limit when it comes to, crypto in India. As Kiran said, all we are looking for is a win-win situation with the government, because what the last level of initiatives have done is that it's crashed the market. The government is not making any money anyway, because the hope was that the government would make some money on taxation from crypto, which is not happening because the transactions have fallen by 90%. So the idea is that once the market improves, because the crypto exchanges make money only on sentiment. When Bitcoin was at 67,000, people were lining to buy a Bitcoin. Now it's at 27,000, no one is willing to buy it. So it's all about sentiment. Once the sentiment improves, the Bitcoin halving is happening next year. We are hopeful that the bull run will bring in a lot of prosperity for Indian exchanges, plus sensible regulations and taxation by the government, and this industry will give employment to millions of Indians.
Okay. Mr. Rajgopalan Menon, Vice President of WazirX, and Kiran Mysore Vivekanand, the Chief Public Policy Officer of CoinDCS. Thank you very much for joining this discussion. Thank you very much. Namaskar. My name is Shishir.
Thanks, Shishir. Thanks.